As would be expected, the twin peak setup has two peaks. In the case of a bearish reversal, it would be preferable for the second peak to be lower than the first, and for these peaks on the awesome oscillator to coincide roughly with the time downswing points occur during the formation of the bearish reversal. This can then be followed by a negative zero line crossover and an acceleration of the downtrend. Moving along, there's currently a neutral to bearish formation that have similar characteristics with two peaks that are almost level with each other. It would be preferable to see the second one slightly lower, but this is adequate, especially since the two peaks coincide with downswing points during the formation of this bearish reversal. And there's that acceleration lower with the zero line crossover, but it ends up being quite weak, not being sustained for long, with the oscillator being close to zero and constantly fluctuating between red and green, while price moves into a defined horizontal range. In the broader context, this turned out to be a strong bearish reversal in the short term within a larger uptrend. And these partial but less than ideal twin peaks setup characteristics did hint at this possibility of a stronger but shorter term bearish movement.